Welcome to the FarrCast, bringing you insights into Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us this week. It is the 23rd day of May. We are past the halfway point here in the second quarter of 2024. And as Ethel Merman used to say, everything's coming up, roses and daffodils. That's it. That's what happens in May. The flowers come up. Everybody's smiling. Apparently earnings come up. NVIDIA comes up. NVIDIA. Holy NVIDIA. My goodness. Lots of news and lots of noise about the big headline stealer of this AI company that does have a new technology with this generative AI and their chips. And indeed, we feel like we are at the beginning of a new industrial revolution, something that's going to add a multiplier, an X, to productivity going forward. And as we look across various companies, we see it helping everywhere. Companies that you wouldn't think, companies that do infrastructure are benefiting from the huge data center build-outs. And those that are manufacturing companies that are benefiting from those build-outs, not only does AI help them refine their manufacturing process to make it more efficient, the need for these data centers consumes a lot of their products. So lots of different companies. You can look to med tech, anywhere. You're beginning to see more and more use of AI, adding to productivity, adding to GDP growth over time in ways we still don't quite understand. But what we understand in the near term is 400+% growth in revenues from data centers for this company, NVIDIA. And so shares are heading higher this morning. Everybody wants to know if it's too expensive. Brian Sullivan asked me last night on Last Call, if it's NVIDIA versus the Fed, who wins? I said, the Fed wins. But you're not going to really stop NVIDIA in the long term if they continue to do and produce a technology that is at the forefront of a growing new trend and a new industrial revolution that we're going to look back on like we did .coms. So with all of that, how do you navigate a market making new all-time highs, a Federal Reserve that's sending out more cautionary messages? And what do you do with your portfolio? What do? I ask Jim Lebenthal. I mean, who else are you going to ask? Cerity Partners, CNBC contributor, my dear friend. Good morning, Jim.
Good morning, Michael. I thought we were friends, but after what you just did to me, I'm not sure.
Excellent.
Because now I'm going to have Ethel Merman in my head all day. It's 7:51 in the morning.
Just so you know, I can do Carol Channing too. I can. Oh God, on Golden Pond. What was her name?
I don't know.
Oh, sure you do.
Katharine Hepburn.
Thank you. Katharine Hepburn. I can do Katharine Hepburn. Norman, it's the loons. Oh, Norman, listen, the loons are coming to say goodbye, Norman.
You sound like you're imitating Kristen Wiig, imitating Katharine Hepburn. All right, how are we gonna restart this?
I got a decent Bill Clinton too, but before we go into Farr's full stand-up routine, let's go back to NVIDIA, because last August, I believe, Jim, you were on the FarrCast and you said, Michael, I don't know what to do with this NVIDIA.
There's something that's discomforting about one company taking almost the whole market share. There's something that just, as a capitalist, that worries me. For the stock market, for the economy, and frankly, for the company as well. And at some point, competition will creep up, but that's not today, and it's not tomorrow. It's in the distant future. The stock split, Michael, is important. And as much as you and I know that economically it makes no difference, it is a signal from the company that they see bright days ahead. And if I think back to, I think it was August of 2020, I'm pretty sure that's when it was, when both Tesla and Apple split, those stocks went up 45% roughly in the month of August on nothing more than their stock split. And that memory is too close for the combined aggregated investor community. They're going to do the same thing again with NVIDIA. I don't know. Again, I go back to, why am I holding my nose? I feel like investing should require, and in fact does require, a little bit more intellectual pursuit than just chasing the winner.
Well, chasing the winner, but it's all as to the why, right? It's all as to the why you're chasing the winner, and will this be driven by earnings? And if indeed these earnings continue to grow at 30% a year for the next 5 years, great. As I said in my opening, if it drops down to 15% a year, but that's not what we're seeing now, and we're seeing something that's riding a expansionary wave. Things that go up very quickly, ladies and gentlemen, can go down very quickly. And when we remember back to the dot-coms, when companies like investment banking firms, Friedman, Billings, and Ramsey, first changed their name to FBR, I guess that was kitschy, and then they became FBR.com. And at that time, they put 30 or 40 computers in a room and said that that was their .com room. They didn't change a thing. They added .com, and they got a bump, as did many companies, because they did that which was popular. So I think if you became Cerity AI, Jim, Cerity Partners AI, if you said that you were wealth management, investment management AI, I think your valuation goes up. What do you think in this environment? I mean, that's not absurd, is it?
I know what you're saying. I will steer clear of devising corporate strategy for my fine firm. They would not appreciate that. However, your point is well made.
I want a consulting fee. When they change that name, Lebenthal, you tell them they owe me. People steal our stuff from the FarrCast all the time, you know.
I gotcha. I don't think it's going to happen, but I will keep you in mind if it does happen. I get your point, and it's well made, Michael. I mean, we all remember the late 1990s when, all you had to do, as you just said, was put a .com or, put the letter I in front of your name, iVillage, things like that. That echoes quite often. I remember just a few years ago, right? If you put Bitcoin in your name, or blockchain in your name, your valuation immediately went up. Wasn't there some iced tea company that did that?
Oh, I like that. You could be Cerity blockchain AI. What about fixed income at these levels? Nobody's really talking about the yields and the costs and the interest rates now. The Fed is trying to make noise, but nobody's talking about the Fed because of AI and because of NVIDIA. And 442 on the 10-year Treasury, 487 on the 2-year Treasury. We still have a 45 basis point yield curve inversion, and everybody, you want to talk about being sick of talking about NVIDIA. Everybody's completely sick about talking about what's going on with the Fed and the yield curve. What do you think? And what does this inversion mean? And it's always predicted a recession, and it's never coming, and nobody's talking about that anymore either.
Yeah, well, and it's almost been 2 years that it's been inverted. Let's leave the yield curve inversion to the side, at least for a moment. I think your question about what about bonds has two answers, one as an investor and one as, an economist or as the central bank would think about it. As an investor, these yields are really quite tasty. If you think about the Treasury levels that you just talked about, add a little corporate spread, and you can be up towards 6% in pretty high quality bonds. However, I think the bigger point is that the central bank cannot be happy with what's going on in the stock market. It works completely counter to what their desires are to get inflation down towards 2%. You're having all this newfound wealth created in the stock market. It will flow through to the economy. And I'm not just talking about corporate spending because companies feel flush with their stock prices high. Investors feel good about their portfolios. They go out and they spend. Now, all that said, I think it's an awfully high bar for the Fed to raise rates anytime soon. And the biggest thing, I think, is the election. I know, and Michael, the Fed's independence from politics is vitally important. That's something I strongly believe. And as much as the Fed will say, well, that they never think about elections, the truth is they are having a lot of slings and arrows thrown at them. And they know that if they raise rates going into an election, they're going to be accused of putting people out of work and throwing the election to the challenger or the former president. I just think that's a hill they don't want to approach, let alone climb.
How do they avoid it, Jim? I mean, how do they? I mean, and in the
You do it in
background,
2025. You do it
huh?
in 2025 is when you raise rates,
Or December.
or December.
Yeah,
Now, look, I want to be clear because I don't want to be provocative or overly provocative.
I
Right
like it when
now,
you're provocative. You know,
I know, but let me not be careless. Right now, the Fed is clear that they want to lower rates. All right, that's the direction the Fed wants to go. My point in general is where the stock market is works strongly counter to what their desires are,
yes,
and that can only go on for so long.
yes. We're going to watch all of this, and I've been watching the price of gold. And when gold started moving above $2,400 an ounce, that indicates that is a sign of inflation. That says that it takes a lot more dollars to buy that ounce of gold. And Jack Perugian suggested that it might be an indicator that the markets are worried that the Fed is going to lose control of the long end. It's come back under control. It sure seems to be trading right in line with the rest of the yield curve historically. I'm sorry to get so wonky, folks, but I mean, we have to watch for all of these little signs, give us an idea of the landscape ahead. So, Jim, let's just bring it home here for Fred and Ethel. Markets making new highs. AI has a keen role. We're getting ready to go into the summer and all of these other things. Earnings season is now over, and we're going to sit on our heels and listen to the Fed murmur for the next 6 weeks until we get some earnings and another Fed story. Tell us what you expect.
Well, I expect gains from here till year end, but I expect volatility and I do expect rotation within the stock market. A somewhat banal analysis would say that current estimates for next year on the S&P 500 are $275 a share. If you put a lofty multiple on that of 20 times, and that would be lofty, that would indicate at year end you're going to be at 5,500. That's about 2% higher from here. I would encourage folks to do two things. One, balance their portfolios. It's not just tech. You can look outside of tech and find attractive growing companies at reasonable share prices. And two, buckle your seatbelts. And this is important. This is a time to stay invested, not to make large moves in and out of the market. It's going to be bumpy. We've got a huge presidential election coming up. You've got geopolitical strife all over the world, and you've got social struggles all across this nation. It feels ugly. This is the time to be invested and buckle your seatbelt. Stay invested, folks. It's a good time in the economy and the stock market. Stay invested.
Jim Lebenthal is a partner at Cerity Partners, CNBC contributor, my great friend. Thank you, Jim.
Michael, great to speak with you.
Always. We're going to be back. Dan Mahaffee, Dr. Scholl Foundation, Center for the Study of the Presidency and Congress. What are these people doing this week? It just never stops. And what's Justice Alito doing with his flags? When we come back on the FarrCast.
Thank you for joining us this week on the FarrCast. Now it's time for political analyst Dan Mahaffee and your host, Michael Farr.
Welcome back to the FarrCast. Joining me now, as he does every week, Dan Mahaffee from the Center. Oh, no, wait a minute. From the Dr. Scholl Foundation, where he is vice chairman. Moving on up, as they said on television years ago, moving on up on the Jeffersons. And so is Dan. To the Dr. Scholl Foundation, Center for the Study of the Presidency and Congress, the senior political analyst on the FarrCast. Welcome back, Dan.
Thank you, Michael. Great as always to be talking to you.
Always great to have you here. We always learn a lot. Dan, let's do an around the world this morning and cover a bunch of different stuff. President Trump's trial coming to an end. Everybody's looking at instructions to the jury. What happens here? Do they actually get 12 New Yorkers with 2 lawyers on the jury to agree on anything?
That's a good question. Is it 12 angry men or just the usual chaos of a Manhattan subway car transitioned into a jury deliberating room.
Okay, we'll split the baby and give you half and half, and I still don't think that gets you to an easy decision.
No, that does not. And the question, I think, is does the back and forth that we've seen, look, there's been a lot of colorful discussions, the reliability of Michael Cohen, his character, all those things. And, I use the character, with inverted commas around it. You're not seeing that on a podcast. All of that, I don't think really moves the needle. I think all these court cases now are becoming so polarized. You throw in the upside down flag at the Alito home, all these things we keep hearing about. Who is Clarence Thomas going on vacation with? Who is Judge Merchan's daughter working for? Why is Eileen Cannon doing this? All of these cases are now hyper politicized. The judges have been drawn into it. And I don't think you'd have anyone who thinks that these outcomes are going to move the election needle, either just firing up the anger on one side or the other when they don't get the outcome they'll want.
Right. Okay. So let's take a look at this particular trial, and then we're going to move on. I don't want to spend a whole lot of time here, but as I listened to the president's former attorney and fixer, and I listened to the lies. I've listened to the thefts. I've listened to the everything. And yet I felt, just listening, as truly, I think I'm as an impartial listener as could be out there, I was inclined to believe him. I'm still inclined to believe that there was that this hush money was paid, and that President Trump at that time did not want that traced to him, and he was trying to wash it. Now, I'm not sure exactly what the crime was there, unless campaign funds were used for that. Though I think campaign funds get used to pay off legal debts and all sorts of silly stuff that you wouldn't think they could be used for. It was, in spite of being kind of a horrible person. And by the way, it strikes me we have a horrible person testifying about a horrible person. There's no disputing that there was a sexual affair with this adult actress while his wife was expecting his child. I mean, this is not commonplace stuff. So where do you come out on this? Did he come off as being credible?
Look, I think it, as you said, comes down to the credibility of uncredible people. And I think the ultimate factor is that there are no real new revelations, I think, other than their salacity about the behavior of the former president. And for many of his supporters, that behavior is a feature, not a bug.
Yeah, and will you get 12 people to sit there and come to my conclusion?
Well, I think that, again, it's the question of, look, the behavior is certainly sordid, but that's the leap of, did it benefit his campaign, and did he defraud his businesses by benefiting his campaign? And those are the matters before the court there.
Right. So you get me to feel the way I feel and say, where was the crime, and really just try to, drill down on what happened. And there are two lawyers in that jury room who could form camps. And if they form camps, you go nowhere. So I'm thinking this probably does not create a big hitch for the former president over time. If anything, it's gotten him a lot more airtime, and he looks the victim. So, Dan, let's move. Joe Biden's missing lots of steps, and Joe Biden is apparently, yesterday we heard, why should Joe Biden, from his press secretary, why should he take executive action to shut down the border? Pardon me? Why? So much is tone deaf in Washington, but it just seems to be getting even more so. What am I missing?
Well, poorly answered question when the public is genuinely concerned, but the press secretary was inartfully trying to put pressure back on Congress, where there are proposals for border security that have been shot down by Republicans, even though they were negotiated by Republicans. But this is, again, the Washington game, we're going to go back to their new favorite word, kayfabe, of Washington does not translate well to the voter who's genuinely concerned about the border, concerned about our debt, all these issues that are not getting addressed because we have the election rhetoric back and forth taking over now. It's a blame game on the border, not trying to solve it.
Kayfabe, what is kayfabe? But we got email. And I had one guy who wrote me and he said, I've been listening to the FarrCast since episode 1, and you now just wrote me in forever with kayfabe. I love the big wrestling. I love the
Again, it's that the characters, the personas that these wrestlers take on, and that they won't break the reality of this political battle that they're fighting, even though we know clearly. And look, they've got big concerns in the White House about taking executive action on the border. One, because they don't have enough personnel in Border Patrol. Two, there's the break glass principle of, if they do take this action, what legal precedents or tools are they putting in place for perhaps President Trump? So they don't want to have a memo sitting there that then is the basis for the next president, perhaps President Trump, to turn around and be even more draconian in a way that they would rightly worry that this current Supreme Court would hold up.
Will Donald Trump be the next president of the United States?
If the election were held today, yes.
Will Donald Trump be the next president of the United States?
If you had asked me today, again, yes.
In November, you say yes.
I say yes right now.
He wins. There's a new president in Taiwan, Dan, and we've seen the news in NVIDIA, and we're also aware that Taiwan Semiconductors can really compete actually with NVIDIA, one of the very few companies that can. You're not hearing much about them, but what you are hearing is Chinese aggressive flyovers and war games over Taiwan post the election, and that's all a reaction to some comment that this new president of the country said about the independence of the country. You're not allowed to talk about the independence of the country when you're the new president of Taiwan. What does this mean for peace and stability in Asia?
Look, China's trying to flex their military muscle, Michael. They're not aiming really to respond to any of these comments because these exercises were planned long in advance of whatever the inaugural speech was. What they are showing, though, is that China has the ability to blockade and particularly reach that east side of Taiwan to hit military facilities there, as well as to make it really hard for the United States or Japan to reinforce Taiwan from the east. That said, though, China is also, again, the more they do this, the more they antagonize Taiwan, the more they encourage Japan, the Philippines, and others to work closer with us. And when you talk about those ever vital semiconductors, it's not worth forgetting that the articles we see noting that the companies TSMC and also the Dutch company ASML saying that they can remotely shut down their equipment on Taiwan if there was ever a Chinese invasion. So question would be, if China invaded, would it get those facilities intact?
Yeah, but we know that Xi Jinping really doesn't care about the economy anyway, because that's what he tells us. He cares about China and he's not concerned about business. We'll see what happens there. Dan, in our last minute, take me back to the Middle East. Take me to Israel, Gaza. It seems that suddenly we're satisfied with the way that Benjamin Netanyahu is going in to Gaza, is approaching Hamas right now because they're doing it in a more limited way. So this seems to be fine this week, and it wasn't fine last week. I got 1 minute, Dan. Fill me in.
More limited approach we're seeing combined with the opening of the Gaza pier, allowing for more aid. Look, it's imperfect, but at least they've
This
not.
all looks like spin, Dan. I mean, they're still at war. They're still in there shooting people. I understand we're taking, but it just looks like spin. I don't buy it.
Well, they've gone in without using the heavy weaponry, the heavy push we feared they would do. So it's at least not a minimized impact, although still a horrific situation on the ground. I also think a lot of the not wanting to rock the boat with what we've seen in Iran and questions of further Hezbollah activity on the northern border, all of this fits within the broader regional worries about escalation too.
Ladies and gentlemen, keep in mind that of all the things that markets and Wall Street hate, of all the things that they hate, surprises are among the most loathed. Surprises. And each of these things can have a particularly harsh economic impact if they turn into a surprise. If there's some action in Taiwan, if there is a big, huge problem, though it seems like Middle East might be getting resolved, and that could end up, you see, with the impact here of perhaps lower oil prices, better commerce, a little bit better economy, peace, less human tragedy and cost. We watch all of these things because, of course, we care about them. We want to stay informed, but we also want to understand our economic world and our investing world. We hope this helps you. It certainly helps me. Dan Mahaffee from the Dr. Scholl Foundation. Thank you, Dan, very much.
Good talking to you, Michael.
We're going to be right back with Mark Hamrick from Bankrate.com. He used to be with the AP. He was president of the National Press Club, and he's one hell of a nice guy. When we come back on the FarrCast, please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. Thank you for joining us on the FarrCast. And now, back to your host, Michael Farr.
Welcome back to the FarrCast. Thanks so much for being with us this week. It's the 23rd day of May. Markets have been making new highs. NVIDIA is making new highs. NVIDIA is going to split 10 for 1. And Jim Lebenthal says that's always a good sign for stock price performance. The economy is continuing to roll along and inflation will not die. It has diminished, but it will not die. And in the Fed minutes that just came out, we see that a number of Fed governors are indeed still concerned about the rate of inflation and are even considering hikes. It strikes me as jaw-boning noise. Frankly, I don't think they're really considering hikes, but I think they have to say so because the market narrative runs away with this bullish, they're going to ease, they're going to ease, they're going to ease. Did you hear the inflection in Chairman Powell's tone? Did you hear what Jay Powell the corner of his mouth went up when he said that, and I think that means that they're definitely going to ease. Sure it does. Maybe you should check the tea leaves in the bottom of the cup. Maybe you should get out your tarot cards. Maybe you should do all of those things and do whatever you need to do to come up with a story other than the one that Jay Powell is telling. Listen to Jay Powell. Listen to those minutes and quit making up these silly narratives of all of this easing and all of this and they're not saying it. And they're going to stay steady as they always have. And markets set themselves up for more, I think, disappointment. But I expect the Fed to stay steady throughout the balance of the year. If we get any kind of a rate cut, I think it could be the Christmas present December cut after the election. Always pay attention to a presidential election cycle, always. Now, we have markets going up. We have a little bit of economic data today. We got jobless claims in. They were slightly weaker, really not meaningfully weaker. And we're watching markets go up. And when markets go up and NVIDIA goes up, we saw the overnight market cap increase by like $150 billion. That's more than adding a whole new Ford and a whole new GM in market cap to the stock market. And that's a lot more money out there. And people who own NVIDIA can do one of two things. They can sell it and have a lot more cash to go out and spend. Any stock that goes up like this, I'm not recommending anything here. Or they can borrow against it. They can margin it and they can go out and buy more stuff. So when the stock market goes up and these things go up, that creates more dollars, more purchasing power, and that doesn't help bring down inflation. So if the Fed says ease and the market goes up, they create a problem for themselves if their battle is inflation. So what do you do when the market's going up and the Fed seems to have control and sitting on the sidelines and political? We go to the most experienced people we can find, and Mark Hamrick is absolutely one of them. He's been a dear friend of mine for 30 some odd years. and is Washington bureau chief at Bankrate.com. He's their senior economic analyst. He was at the AP. He's been everywhere in media. President of the National Press Club, former president of the National Press Club. This is the guy to see in Washington. Mark, what do you make of everything that you're seeing with the Fed and markets, the ebullience, etc.? And how can you put that in perspective for investors who are overwhelmed with these daily news cycles of breaking story? Every news show now has breaking news at least 5 times during the hour. Nobody has breaking news 5 times, but every one of them runs a banner 5 times breaking news.
Great to be with you, Michael. Thank you for that very kind introduction. Great to know you and have you as a friend over these many decades. You and I have been around long enough to know that markets go up and down over periods of time, and there'll be periods of great enthusiasm, perhaps even irrational exuberance. And then there will be the periods of fear and the sense that life as we know it is coming to an end. And so I just tend to look at these periods as enjoy it while it happens and know that, it won't continue forever. But as, you and many others who are much wiser than I am remind us that we want exposure to equities and their cousins for their superior performance over the long run, because history tells us that inflation will be with us. It's been outsized in recent times, and the money under the mattress just doesn't cut it. So that's why we reach for yield, and the stock market is as good a place to get that as anywhere. And much the same as being at the punch bowl when the Federal Reserve is essentially on the sides of the market. You need to be ready for the hangover. So enjoy the punch bowl and maybe have some Gatorade and Advil at the ready for when that inevitable pullback or headache materializes.
That is such a brilliant answer. I mean, it was just perfect, because when I asked Jim Lebenthal this morning for his final advice to Fred and Ethel, he said, stay invested. Just stay invested. This is a long-term thing. Don't get, I'm going to add a little for Jim, don't get sidetracked by all of the short-term noise, by all of the hysteria and emotion. Farr has said for years that emotion is the foe of the long-term investor. This market is wrought with emotion and emotional news and emotional headlines, and former presidents stomping out of courtrooms, and judges clearing courtrooms, and press secretaries saying, why should he do it? Why don't they do it? And Marjorie Taylor Greene saying whatever it is she says that's just going to be so bombastic. I don't even have to quote her. You can just make it up on your own, and don't think she wouldn't say it. And of course, between Israel, Taiwan, a war in Ukraine, it's not like we need stuff to kind of grab our attention. In fact, our attention is overwhelmed. And I think really when you find these periods where your attention span, when you're overwhelmed with information and your attention span is stretched, it's a good time to retreat. And there's nothing wrong with retreating. And retreat and stay calm and meditate a little bit and maybe turn off the television and say, all right, why am I here? Why do I do this? What are my goals? And how should I be thinking about my portfolio? Mark, you've seen this for a lot of years, and you've seen these cycles. What advice do you have for folks when they get to I guess, really frothy part of a news cycle that coincides with a frothy market?
We don't know where it ends, right? Markets can be out of balance, if that's the right way to look at it, for a long time. And the most basic takeaway, I think, is consistent with what you described earlier, Michael, and that is only a fool tries to time the market, right? Only a fool tries to say that this is the top. Now, I would say that if people are looking at this situation right now and say, you know what? I've had a good run. Maybe my investment horizon or timeline is a little shorter than other people. I don't quarrel with anybody that would say maybe it's a time for me to look at whether I want to dial down risk, and that's more of a intermediate term consideration than, or it could be long term, if one's getting up in years and has reasons to think that way. But I just think the long term perspective is always appropriate. And I haven't seen anything in essentially my 4 decades of watching this that has shaken my confidence in that. I really haven't.
One of the things that makes people angry when I say it on television, another way, I get lots of nasty emails and stuff on Twitter, etc. Stuff on X. I don't know why the hell we have. I mean, the artist formerly. I need to change my name, Hamrick. I'm going to be the, artist formerly known as Michael Farr. I think just that. FMF, formerly Michael Farr, formerly MF. Maybe I'll just go with MF from now on. For Michael Farr, ladies and gentlemen, please. And but yes, if it feels bad, do it. Has been one of Farr's rules about investing. If it feels bad, do it. What feels good today, folks? Think about it. What feels good to you? If it feels bad, do it. Have you made a ton of money in any one of these stocks? Is your position that started out at $100 a share now at $1,000 a share? Talk to somebody. It is a time to rebalance. It's always a time to reassess and make sure that your portfolio and the risk in your portfolio is aligned with your goals. And as Mark just pointed out, your stage in life. I've got a lot of white hair on my head, folks, right now. I have mirrors in my house. I know how old I am. And no, I don't need to swing for the fences anymore. I need to keep what I have. I like to see it grow, but I don't need all of that risk. And I need to remind myself that I'm not 25 years old. I need to do that when I'm doing athletic things. You're not 25, Michael. You're not 25. It's a good way to get injured. It's a good way to get injured in your portfolio, too, forgetting where you are and what stage. So, Mark, as you're looking at the economy right now, and you've got your great perspective at Bankrate, and you talk to all of these people, do you think that GDP continues to expand? Do you think we're still at risk for recession? Nobody wants to talk about it anymore, and yet the yield curve's been inverted for over 2 years now.
Well, we're always at risk of recession, right, Michael? I mean, that's part of the economic cycle. So the question is when, how deep, how long does it last? But it doesn't appear to be imminent. I think that's the key. Our economist survey we do quarterly, we're getting ready to do another one here in about a month. That had elevated risk of recession really since the first quarter of 2022. And yet,
listen, I participate in that survey. That's the box I've been checking for 2 years. Of course, there's a risk of recession. Yeah. All of the data suggests that we're at risk of recession. Yeah. That just won't damned happen.
Exactly. Not yet, right? And so do I think it's going to be tomorrow? No. Could it be by the end of the year? Possibly, but that seems not consistent with history in the sense of the way markets perform during presidential election years. Obviously, this is an unprecedented election in many ways, but the market seems to stare through all this at the moment. That's the market.
I'm getting tired of these unprecedented elections. It seems like the last 6 have been unprecedented elections. I'd like a precedented election just for once. Please, a precedented election. Give us your quick take on the political scene, and will it affect markets? And then we got to go.
I think the baseline expectation right now is that divided government is what persists. And if divided government persists, leaving aside, the sharp divisions that we have in this country about, I'll say, ideas, or it's more about, cheerleading for teams than it is for ideas. I think divided government is still the baseline expectation. And that means that there are going to be guardrails of some kind as long as law remains intact. And that's a key question, and not one that is insignificant. So
we're gonna, I think we look for that, and divided government might even begin to be working under Speaker Johnson, and maybe a little reaching across the aisles, and maybe we're on path again, Mark Hamrick, to be that shining city on the hill, the example to the world, where we strive for nobler things in this country, because this country is better, because we dream, because we raise our sights, and we're willing to put our shoulders to that wheel of improvement to better our condition and take the rest of the world with us take that place of leadership again. I sure would like to see it, and I sure am glad you've joined us on the FarrCast. Mark Hamrick is the Washington Bureau Chief, Senior Economic Analyst for Bankrate.com, and my great friend. Thank you so much, Mark.
Thank you, my friend. Great to be with you.
That's it for another FarrCast as we cover Wall Street, Washington, and the world, giving us a better understanding of what's going on around the world and in the economy so we can make sense of it and figure out how we're going to invest and what we can expect going forward. See if we can get a little more stable ground beneath our feet by learning from these great people on the FarrCast. That's it. Thank you for everybody at Hightower and Farr Miller in Washington, our producer, Harry Jennings. We'll be back next week. Thank you. Have a great, great holiday weekend. I'm Michael Farr, and I'm so grateful to each of you. God bless.
Thanks for being with us this week on the FarrCast, and thanks to our guests, Jim Lebenthal, Dan Mahaffee, and special guest from Bankrate.com, Mark Hamrick. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Stream past episodes as well as subscribe so you never miss a new one. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And as always, if we can be of assistance at Farr Miller in Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'm happy to arrange for any of our listeners an appointment with one of our financial professionals to review your portfolio, your needs, and your goals. We love reading all of your notes and try to reply to as many as we can. You can reach us at hjennings@farrmiller.com. Let us know any questions you have about past episodes or questions you'd like us to answer in upcoming shows. Take care, stay safe, and stay healthy. Thanks for listening to the FarrCast. Wall Street, Washington, and the world. Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and a SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr Miller in Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.